Hi, I'm Keith McCullough, and welcome back to another real conversation. Someone who's no stranger to HedgeyeTV, and one of my favorite strategists, analysts. I think you'll always be considered deep down, however many books you write, Chris, an analyst. You know, one of my favorite, and especially when we try to get to a topic like this, we're going to talk about all the forthcomings, I guess, of the Federal Reserve, Janet Yellen, fully intertwined, and inflation. So thanks for making some time to have a conversation.
Always a pleasure, Keith.
Yeah, it's for those of you that can't tell, Chris is moving there, so he's usually got all of his books in the background.
That's right. We'll have books soon, I promise.
Yeah. So maybe let's just start with, you wrote a great piece that we popped up on our website that had to do with the subject matter that I just at least tried to outline the beginning of it. Maybe just an opening volley on what you think's going on with inflation and the impact of the Fed embedded therein.
Well, we don't know. The economy has been disrupted in such an extraordinary way that the averages that most policymakers look at are useless. I did a great conversation with Ed Kane about this a while back, and he said, look, if you're looking at the averages, you're looking at the wrong thing. And most of these indices are never really meant to be true representations of what's going on in the economy. And I think it's tough for the Fed because a lot of the data they look at, this data-dependent Fed, is not helpful. So we're flying blind.
When you look, and I get this question a lot, actually one of the biggest insurance companies in the U.S., their founder was going off on this the other day, and his CIO was trying to get me to give him a better way to answer the question. But he's like, why do they define inflation this way? This is not what's going on in our business. It's not what's going on in the economy. And he was asking me for different ways to look at it. And I said, well, you know, we can look at it like we look at the Billion Prices Project. We can look at this over there. What I said is one very easy way is to track real-time commodity prices. That's part of it. It's not all of it. But what else is it that you pay attention to all day long when trying to bean count it?
Look, I spend a lot of time in the housing market, and I'm renovating a home too. And one of the things I've noticed among contractors here in Westchester County, New York, is that they're moving away from firm fixed pricing to time plus materials.
Yep.
And this is because they can't control materials costs right now. And this means that those price increases that are flowing through the channel are going to end up going straight to the consumer. And this is non-monetary inflation. This is something the Fed can't control, which is why when they are trying to fine-tune the economy, the fool's errand that you've been very kind to showcase, they're really flying blind. They have no idea what's going on. My friend Brian Barnier did a great post for our blog this week on this topic. And you know, the monetarist definition of inflation is what we use, even though nobody likes monetarist economic theory, right? So there are so many ironies in this discussion, Keith, it would take us all afternoon. But bottom line is that the Fed is a backward-looking agency. Economists take their whole career to build their credibility. So when you tell them that the data has changed, and they need to make a change in their analytical methods, they don't want to do that because it means they have to throw away their entire career.
Well, I mean, most of them are what we affectionately call, of course, it's a huge compliment, linear econs. I mean, if you're a linear econ, you know, you went to the school of linear econ hard knocks like I did in New Haven, Connecticut, it's linear. It's all these nice linear charts, supply demand models, and this equals that, and this equals this. There's nothing that has to do with the nonlinearity that is inflation. That is, I mean, I've actually heard people say on Wall Street this year, oh, that move in bond yields was nonlinear. Moves in bond yields are always nonlinear when the move in inflation is nonlinear.
Yes. Well, for those of us who look at mortgage-backed securities and servicing assets, yes, that's right.
But there's nothing that's going to change the institution that is linear econs. I mean, there's nothing, literally quite nothing. And I wonder, you know, when you, and this is, I think this is the point of your note, at least one of the major points, is that by the time the linear econs figure it out, it's too late.
Well, that's right. And again, they're not going to let go of a lifetime of work. If you tell them that things have changed, they have a problem because they're no longer relevant. This is the problem of putting economists on the Federal Reserve Board to make policy. We should have economists work for the Fed at a staff level, but putting them on the board to actually make policy is a terrible mistake.
Yeah, it's nuts. I mean, they do. You know, I've sat in front of the New York Fed and presented my case on different topics, but it's not. There's no repeatability to it, right? You don't have like a committee of. They're not going to call. I'd humbly submit that if they had Chris Whalen present his view of it, you know, my team and I present my view of it, and take another 3 or 5 or 10, you know, credible independent research shops that don't have an axe to grind or a linear econ, you know, Nobel Prize to support, you know, you might actually end up with something closer to the answer.
Well, that's why I always like to say to people, I'm an economic historian and I'm an investment banker. I work in the market, as Keynes did. So when you combine a knowledge of how things have changed and the fact that those data series change over time, and that number that you saw 10 years ago and the same number today are not the same, then you start to get wisdom and you start to understand what you don't know. Okay. Yeah. Which is ultimately, as an analyst, what you always have to do. I love talking to my friend Barry Ritholtz about this because it's the cognitive illusion that we know what's going on.
Well, the only thing that we know, like on inflation, is what it was looking backwards and what is happening today. That's why I think, again, if you're just using a stochastic model as opposed to a deterministic or what we're affectionately calling linear econ models, that's a far better way to do it. I mean, that's obviously, if I didn't think that way, I wouldn't be modeling that way. One thing that we do, and I just want to get your feedback on this on slide 65, I mean, there are leading indicators that even lead you to the number that they deem to be inflation. So on this one, we're showing like what you're talking about on the housing side is fully loaded into this. Guys, on slide 35, if you would, where we're showing prices paid minus prices received. And that's, you know, again, even if that's all you use, you know, these are the prices that are already being received. These are even in the Fed's regional survey composite indices, which is interesting. It's always front-running the Fed. Their own composite surveys are front-running the Fed. You know, that says that we're going to definitely have something north of 3% inflation, even on their own reported metrics. Do you think that you know, let's say that I'm right on that. Do you think that is enough to start ringing some more severe alarm bells as opposed to Powell just getting up there and saying, hey, look, you know, it's transitory or whatever?
I do, Keith. And the reason is that we're not just seeing prices move around. We're starting to see behavioral change on the part of actors in the economy.
Right.
And when you start convincing vendors and retailers and everybody else that they have to increase prices, you see this in big cities, for example, where there's been enormous disruption for most businesses. Over time, that's going to get embedded. It's almost like the 1970s when you and I were kids, right? Yeah. Well, guess what? Inflation was assumed.
Yeah.
And people would constantly be factoring that into their pricing. So again, think about that contractor who gave me a firm fixed price for our work back in February, who's now quoting time plus materials.
Yep.
That's it.
I was what he affectionately called a lot of different names. My dad's laborer on the construction site. He was a firefighter who built houses, and I was just, I get that. He could, because he could only build one at a time, right? So it was always cost plus materials. Here's the selling price of the home. That's reality. I mean, the problem is that most Wall Street analysts and certainly people at the Fed didn't work in the real economy.
We had a long period of stability in pricing, and I think who knows why that was, but for a lot of actors in this economy, it was okay to give somebody a firm offer for services because the time frame really didn't have a lot of price risk. Now it does. Yeah. The price of mahogany, for example, for use in home building for door frames and things like that has tripled in the last 90 days in the northeastern United States. Clear pine 2x4s are now over $10, which is crazy. Yeah, it's crazy. But the Fed has used housing as they always do to pull the economy and try and get demand, but they fail to appreciate or at least admit publicly how much damage this does and how much distortion this puts into the mix.
Now, I want to get through, you're putting up the pins in the bowling alley, even the ones with the, like for me, because I'm terrible at bowling, I got the benders up, I can hit these pins down. I want to go through cyclical inflation and then the secular potential surprise that might just be a big cycle surprise, and within the lens of housing and all the new goodies that we're going to give every human being in America on housing. So first on the cyclical one, Guys, go to slide 15. Because this is, when we talk about inflation versus deflation, at least if my nowcasts are right, even on their own numbers, and again, we've already tabled that these numbers are bullshit. They've changed the CPI number 9 times since 1996 so that there's no actual, super high levels of inflation. But so Chris, what that chart's saying is that we're going to go north of 3 and then we're going to stick. And I think stick is the main thing. You're going to stick at a higher level than you had for a long, long time. I mean, being anywhere north of 2 was a big deal. Do you agree with that? Cyclically, that's a shorter term call.
No, I do, and let me give you a big example. Home price inflation is going to be permanent. Yeah. Think of 2020 as the bottom of the next reset. So say 24, 25, we will probably get a big downdraft in home prices because we will have exhausted this cycle. And my friend Stan Middleman at Freedom has said to me several times in the past couple of months, think about 2020 as the floor for the next correction. So what that means is that for a lot of families, they're not going to have an opportunity to come in and buy a house unless they really time it right, but rates may be higher then. So the balance between the cost of interest rates and the cost of the home is constantly in flux. And it's a very complicated equation because, rates are still low now, even though home prices continue to go up. But I think a lot of other prices in the economy, durables, non-durables, are going to remain where they are simply because the Fed refuses to allow deflation.
Yeah.
In the old days, we had a recession, you could go buy a house cheap. And that was a great way for people to build wealth. We don't allow that anymore because we're so worried about debt and deflation, which I think is still the biggest problem we face, Keith.
Well, I want to get through that as soon as we get through this cyclical piece, because I get in more conversations about this as you do too, with so many institutional investors and asset allocators. They're really just trying. But what you just said, as Chris always is, it's always like these time series are like embedded in his head. But I can actually show you back to that slide 15. Inflation, we have inflation. So inflation's not transitory, like it's here and then it's going away. It's going to slow to a level that it was at the peak of the cycle in 2018, okay? Never mind 2020. So that's the whole concept of a big higher lower, what Chris just said. You're going to slow to the floor, but the floor is much higher than where it's not ever, but where it's been, okay? So that's one thing. Second thing, secular. This is the big one, Chris. I mean, and this is fully loaded on, because you've already mentioned it. Guys, go to slide 48, which is, this is showing we're showing the deficit inverted against the dollar. Okay, you mentioned the 1970s. That was the first experiment where when the black line's going down, you're expanding the deficit, and the dollar, just followed that on a lag. So the dollar would go lower and lower. So a big part of this, and by the way, under Reagan, you expanded the deficit. Bernanke's the big one, though. He doesn't get anywhere near the stardom or credit that I give him. But in 2011, he devalued the dollar to a 40-year low, and the deficit obviously was on its, that chart was on its prior ass, or the low. But now we've shot through to new lows. But back to that 1970s point, it was a dollar story as well that you could definitely tie to the administration. Do you agree with that or not?
Well, it was. In those days, we actually used to worry about the dollar, remember? Today, the assumption is that nobody can go anywhere else, even the Chinese, because the other currencies that can support trade and that can handle financial flows of the size that they are just as inadequate. The funny thing is, remember, we're on an inflation roller coaster in the United States, but inflation is embedded into our system. So even though the Humphrey Hawkins law says price stability, full employment, and stable interest rates, the third part of the triple mandate, right? The reality is that we have to have inflation in this country for both political and financial reasons. The democracy cannot discipline itself in terms of fiscal issues. We see that more than ever before, right? Yeah. And then at the same time, if we were to really run a boring, hard money kind of regime, politically it would be untenable.
Yeah, the politics of that, the slide before that gives a cartoon that Chris and I can laugh at, because basically the cartoon is what we're talking about here is Powell combined or weaponized with Yellen's shovel. There is putting price discovery to bed. But I mean, can you talk about that too? We have an administration that wants to get X done before the midterms. She likes to, she's not. I say this to people all the time, and I don't know if people all agree, because when you're on these Zoom calls, institutional clients just kind of don't say anything back a lot of the time, so you're just talking to yourself, which is fine with me. I do it all the time. But I always say Janet Yellen doesn't give a rat's ass about headline inflation. She cares about labor. She's a labor economist, and she is going to let inflation, or try to let these guys let inflation run a lot hotter than you think.
No, I totally agree with you, Keith. I was actually berated once by Bill Taylor for suggesting that Yellen didn't care about inflation, but I totally agree with you.
You totally agree with me. That's great.
Oh yeah, what a big surprise, right? But here's the thing, Ben Bernanke understood why we had to grow the balance sheet. He understood why we had to stabilize the relationship between debt and equity in our system in order to avoid a collapse, right? But Yellen went a step further. It wasn't just expanding the balance sheet, but it was to kind of just discard any concern about long-term inflation in pursuit of full employment. And you see this with Lyle Brainerd now too, where she talks about the bottom quartile of workers. And they're right. The disruption of COVID is among lower income households, wage earners, people in the services sector, right? No question. But does that mean we're going to hyperinflate the economy and destroy everyone else? No, I think there are other ways to do it with fiscal policy, for example, but nobody in Washington can agree on that. Mm-hmm. So, as a society, we are quite dysfunctional, and yet the whole world is depending on us to be functional. That's the amazing thing.
Well, it's amazing to watch Janet Yellen. Of course, she wasn't political. She was apolitical. And now you see the rest of the story, which is quite political. I mean, she starts everything she says with this story about her and her dad and how she always wanted to be. I don't know anybody who ever always wanted to be a labor economist. So I'm not saying that she's not being truthful about that. It's just an interesting narrative politically about everybody having the decency of a job. It's like, to me, that's why she's there. Is she not?
That is why she's there to some degree. But again, remember, what is the Fed's priority? Is it employment? Is it price stability? No, it's keeping the Treasury bond market open. So while they talk about employment and while they pay lip service to keeping inflation low, and I mean just barely, right? What they're really concerned about is, can the Treasury go out and issue more debt next week? Yeah. Now, they have a problem structurally because, as we saw last year and at the end of 2018, they can't taper. Bernanke said this, you can't take the liquidity back once you put it into the system. So the growth in the Fed balance sheet is permanent too. I think the Fed is going to have to run at least a $6 trillion balance sheet indefinitely. Well, you can't pull it out.
He put it on the railway track that she perpetuated, and now she has the ability to do MMT with the Fed. I mean, that's probably a conservative estimate that the Fed's balance sheet is at. I mean, what is the upside of the balance sheet?
Oh, the sky's the limit. I think it really depends on investors, particularly offshore investors, and their appetite for U.S. Treasury debt. There's still great demand for risk-free assets. That hasn't changed. But I do think that if you watch the auctions, especially the odd periods like the 4s and the 7 years, they have not gone well. Right. And, the dealer community doesn't have a lot of capital on the table. So when they get overwhelmed with supply, they're going to turn around to the Fed and say, help. I really think there's going to come a time when dealers are going to have to make a choice between putting the capital of the bank at risk and saying no and passing on an auction. And when you see that, we're going to have a bad day, Keith.
No, I mean, that back tests very well, actually. When you see the short end of the curve move abruptly to the upside, like rates, yes. People are like, whoa, that's not the deal we signed up for here. But again,
No.
it's very simple. If you get commodities right, you're going to get inflation right. You get inflation right, the rate of change of it right, you're going to get the long end of the curve right. And at that point, to me, that's the answer of how it's going to be too late, because the bond market's already going to price it out of their hands.
Well, I think they're doing that now. I mean, despite the buy in mortgage-backed securities right now, the market keeps wanting to push back.
Yep.
They keep wanting to back up rates. And I think that just evidences the fact that despite the fact that the Fed is taking just about all of the net supply off the table, they're still not able to control the rate. So this notion that they can dictate terms in the bond market, I think, is very suspect. And yet the Yellen tendency would go further. They would go out and start buying long dated paper and try and do what the Japanese did with yield curve control. That's the end, by the way. You know, the only thing about the US economy that really helped us with COVID after 9/11, after 2009, was the fact that we have a functioning credit market. And if the Fed goes ahead and kills that, then we have a problem. Mm-hmm. And by the way, I think you're going to see Yellen put in place some really radical changes to money market funds and mutual funds. I think you're going to see circuit breakers put in place where money market funds can suspend redemptions, because the Fed doesn't want to have to support these things next time. If they taper, they know that the liquidity problems in the short end of the market are going to require that these funds be supported. And if the fund doesn't have a JP Morgan attached to it, then they got a problem.
Yeah. Well, I mean, we're seeing that. It's been an interesting year at the asset manager level. There have been these pockets of what I call episodic and non-trending volatility, where liquidity becomes a real big problem for selling.
Oh, I like that.
You get a lot of these
non-trending volatility. That's good.
Well, all episodic and non-trending vol is a bunch of hedge fund managers and/or, like you said, funds forced to sell at the same time. That's what it is, and we've had that happen monthly all year, and the S&P is making its 11th all-time high here in the second quarter already, and May has just started. One more point. This is great writing, by the way, on Yellen. I'm just going to read what Chris said in his note. I like this word too, prattles. Secretary Yellen prattles on in public about the risk of global warming, but ignores the growing sea of fraud in global financial markets.
Yeah, it is her job as Treasury Secretary to be responsible for markets. She's the one who needs to keep the auctions open for the Treasury, right? And yet she's going to spend time on global warming. She's now the chairman of the Financial Stability Oversight Council. She should be focused on some of the shenanigans we see in the financial markets. How many Archegos do we have to see before they start to focus? And keep in mind that her predecessor spent 4 years worrying about mortgage servicers as systemic threats to the world. My God, there are so many other things to worry about. And yet these dilettantes that we have in Washington are playing to the political win. So, if we had a Republican in the White House tomorrow, they would sober up and start to talk about systemic risk, I guess. I don't know.
I don't know about that either. I mean, to me, it's all melded into the same thing. I mean, it's easier for me to say because I'm not a Republican or a Democrat. But I mean, at the end of the day, I think all administrations have been all for money printing. There's been no pulling back. I mean, it's now the next infrastructure spending is probably the only bipartisan thing you can find.
Look, my father was a speechwriter for Richard Nixon, and I got to watch him migrate from, California conservative to Allende socialist in a matter of years, right? And so it just proves, that when you put somebody in a partisan political position, any sense of values and principles that they may have had kind of go out the window. When you see the Republicans saying that we should just go along with Biden's spending and run against him in 2 years, what kind of a strategy is that?
Yeah, it's everything, not everything, but a lot of things, sadly, on one hand, it's sad, have become one way. People are just all in with one thing, cancel culture over here. And on the other hand, I think that does give a lot more value to independent research on things that go both ways. I mean, because again, that's what cycles do. I wonder on the question, and let's just get into this housing tie-in, because not everyone does it like you do, obviously, and has the experience, but also the view on housing here. Housing, we have a very interesting situation demographically that the political party is setting up to try to get the votes. We argue, at least on slide 86, you have the most, the highest number of Americans are 30-year-olds today. 4.875 million. Millennials, there are a lot more of them than there are of us. Obviously, Chris, there's 65 million Gen Xers, and millennials, there are 95 million. So if you're to go back to that slide 47, if you're going to give, there are a couple things that they're looking to give people, to forgive their student loans and give them a home buyer tax credit into the same, quite literal same window of time that they'd be interested. Well, you'd always be interested, to be clear, in getting your student loans forgiven, or any loan. But this household formation and these millennials that are ready to buy a $15,000 home buyer tax credit's a fairly tangible number, at least in my life.
I think it's a bad idea to subsidize homeownership, because owning a home is not just buying the home, it's taking care of the home and being able to pay your taxes and support the community where the home is located.
Right.
So all of these progressives like Kamala Harris, who made her political career with the 2012 national mortgage settlement, let us remember, now want to go out and give out tax credits to help homeownership among minority households. Well, I'm sorry. Why is it that minority households can't buy homes? It's because their income is too low. And why is their income under pressure? Because the Fed has embraced inflation, nominal growth, not real growth, as the way of satisfying the Humphrey Hawkins mandate. So if we had a real conversation about this, Keith, it would say, let's see if we can stabilize the purchasing power of the dollar instead of killing consumers by constantly pushing down the value of their money. But we can't have that conversation because in a democracy, as we learned from the classical economists, you'll never have sound money.
Mm-hmm. Well, you have a devalued dollar with infinite deficit spending and infinite money printing. Yeah, what could possibly go wrong? And we already have inflation ripping. You have the most human beings of the modern era coming into the home buyer market, and you're going to give them free money to go buy a house after you forgive their loans so that they have more free money. So that's me, like if I was running that party, which I obviously don't, that's how I'd get the votes. If you just want to buy votes, that's how you buy votes.
Well, think of it this way, Keith. For many countries that have a lot of wealth when it comes to commodities, especially oil, it's seen as a curse, ultimately. Look at Saudi Arabia, look at Venezuela. Right. The skew that energy wealth causes in the rest of the economy is profound. Well, the dollar and the special role of the dollar that the United States has had since really World War II is the same kind of curse, because it lets us pretend that everything is fine. But meanwhile, we're killing our people because over time, inflation is accumulating. And, even if you have a couple percent inflation over 40 years, it's going to take half of your wealth.
Yeah. I mean, dude, I couldn't believe when I read The Deficit Myth by Stephanie Kelton that, I was kind of getting into it a little bit. I'm like, really? This is, you guys are really just going to plainly spell it out. And by the end of the book, they're like, why don't we give you some case studies that we like? Argentina.
Oh, great. Yeah, my relatives in Uruguay are watching people literally swimming across the River Plate to get out of Argentina, okay? I mean, that's a failed state. I think Argentina is going to look a lot like Venezuela in a couple of years.
Yeah, it's never worked. Devaluing your currency and raising the cost, just for those of you that don't know how it works, try it at home. If I burn half of the money that's in your drawer and that's all you got, it's going to cost you more to go buy the things. You buy the things in your local currency. So that's the story of a lot of emerging markets. And to use those emerging markets as an example was, that was just kind of par for the course. Back on the mortgage, you mentioned Kamala and the mortgage market. This slide, I think you're the only guy who can get on HedgeyeTV other than Josh Steiner that can go through this slide 85. Because one thing is to give people free money. The other thing is to loosen the standards on mortgage credit availability. So when you think about this and where it went, it got really, really tight. It's actually very hard to get a mortgage still, even if you have a lot of money. Do you think that blue line Can you see that, by the way, the blue line on the left chart?
Yes.
Do you think that could, and again, we've had a change in terms of political change in the seats that matter there. Do you think that line could start hooking higher again and we go back to a housing bubble in terms of just anybody being able to get credit? It's one thing to get the money for free, but to get the actual mortgage is not that easy.
I think over time, yes, because as volumes fall, the industry will turn away from the easy loans and they'll start working on the more complex loans. You've already seen that the Biden administration has waived the insurance payments for low-income households at the FHA. You're starting to see similar behavior by Mark Calabria at the Federal Housing Finance Agency because he wants to keep his job. He, again, going back to the Nixon metaphor, note Mark Calabria, Cato Institute conservative, migrating to progressive activist.
Yeah.
It's really quite striking. But overall, the quality of mortgages is much better than it was in the bad old days. We have full doc no matter what. And I think that what you're going to see is the Fed's goosing of home prices basically means that from a note holder perspective, you don't have any risk. The risk is for households who get in trouble, get foreclosed, file bankruptcy, and have problems as a result. To me, that's the sad part because you don't see it in the data. But if you look at mortgages today, even private mortgages that are not government insured, the loss given default is very low, Keith.
Yeah.
I mean, for bank paper, it's negative.
Yeah. Well, and what we're talking about too, particularly when you look at the tiering of the home buyer market and what's really been hot, which is the high end. What's really interesting to us is the low end, slide 84, guys, the low end, which the low end in terms of a lower home price is what I mean by that. I mean,
Yes.
that's the pin action there in terms of credit quality is going to go up when you get more and more people in the pool, right?
Well, that's where most homes are. Your average mortgage in the United States is about $300,000. And the pressure on the lower part of the market, that $200,000, $150,000 home, mostly outside of big cities, well, there's a supply constraint. So smaller, families or new families that want to get into the housing market, find that starter home, they're facing a really competitive situation now. As you get above the average, you go up 500,000, 600,000, 700,000. You still have a lot of competition, but at least there's more home building now.
Yeah.
The blue states, ironically, are the ones that don't want to be helpful when it comes to zoning and new housing construction, which I find very, very interesting. Nancy Pelosi doesn't like homeless people. So in California, they don't make any provision for them. They don't try and help them find housing. They just let them live in the street. And I think that tells you everything you need to know about progressives when it comes to housing.
Well, now they're going to have to subsidize the inflation. There's no inflation, but there is on the input cost of the home, so we're going to subsidize that. I mean, you could see, obviously, by the way, everything Chris has said, slide 98, I should have highlighted this right away. We're showing you vertical lumber futures or PPI. There's an input to resi construction costs there. I mean, these charts are vertical. There's no slope to the line. It's straight up. So,
well, not only that, Keith, but you've got a qualitative problem too, which is that manufacturers and suppliers are constantly changing their brands and their names in order to lower the quality of goods to try and maintain price.
Right.
Okay. Classic example is paint. Benjamin Moore has now come out with 3 or 4 different brands of paint in an effort to keep the price down because they're competing with the Home Depot. Well, okay, what does that mean? It means you're getting an inferior product. So quality is another aspect of inflation that we never talk about.
Yeah.
But the way that people keep prices stable is by making that box of cereal smaller in the grocery store.
Dude, I spent way too many years in my dad's pickup truck having him bitch at me about every single thing that he was buying to put in the back of that truck to take it to the work site. We're getting ripped. We're getting ripped off by this guy. We're getting ripped off by that guy. We're getting it's just there's a VIG and there people rip everyone off. I mean that's.
Well, try and buy a DeWalt nail gun right now.
All right.
Okay.
The last question I want to ask before I take there are tons of questions here that I want to that are for you obviously. How do we've talked for 35 minutes about basically inflation going up, no brainer, all the problems embedded therein politically. How do you get to the other side? How do you get back to deflation?
Well, I think we have it now. I think the commercial real estate sector in large urban areas is still under terrible deflationary pressure. And not just big buildings, too. The smaller owner-occupied buildings are a big pain point for the economy. And I think that is what is really worrying the folks at the Fed. They see recovery in some areas, but then they see other areas that are flat on their back. And I tell you, New York City, Keith, is going to be the showcase for this, because even if they open on July 1st, in order to get utilization of those assets back to where they need to be so that the valuation of the building makes sense, is going to be extremely difficult. I think you're going to see a lot of these assets marked down. And I also think, by the way, that there's a huge amount of forbearance going on right now by U.S. banks that they are not disclosing to investors. So this is something to look forward to. Fourth quarter is generally when we take out the garbage, and I think that's what you're going to see.
Well, I mean, New York State is the progressive poster child right now of taking on all this incremental debt and going that way politically, obviously. But it's been a long time though for New York City. I mean, I went to Wall Street in 1998 for my first internship and started working there in 1999. Really, I skated through the best of times living in New York. I mean, I never really felt like I was living in parts of New Haven, Connecticut. Let's put it that way. It's been it was that place. Are you talking about a New York City that goes back to the place that is a little scarier?
I think it's going to look more like the late 70s and the 80s when I first moved up to New York, in a sense that, we have devastated so many small businesses and they're gone. They're not going to come back. So in order to convince people to come in and start new businesses, to attract tourists, attract others to come to the city and do things in the city, you're going to have to lower prices. How do you lower prices on this real estate, given the tax structure, all the fees that the city hits you with? If you rent a storefront today, you're responsible for bringing the storefront up to code. Yeah. Even though it's not even your property, you got to spend the money. So I have so many friends in the city who own small businesses, shops, whatever it is, restaurants, and many of them were just barely making it before COVID.
Yeah.
So now, to make this work, Keith, we've got to see a generalized reduction in taxes and in other pricing in cities like New York, or we're going to have to find something else to do with the land. I mean, very simply, how do you make Lincoln Center work? Okay. How do you make all of these amenities, all of these public-facing businesses and not-for-profit institutions, museums, all the rest of it work, given the cost structure that Bill de Blasio has put in place in New York City? It's not going to work.
It doesn't make sense. I mean, some of our big clients, like I was at a hockey tournament in Nashville, and I'm looking at this building on Broadway in Nashville where, if you want to get out of COVID, that's where it's at, right, for a weekend.
Yeah.
But I'm like, is that a Alliance Bernstein building? That's like, it's, yeah. So Bernstein, it's like that mother ship, like when you're walking down, is it Fifth Avenue? It's like a big, it's like for people that are like us walking around doing business meetings on the street, that's kind of like a beacon. It's like one of the big buildings of Wall Street. And now it's going to be in Nashville. Right at the edge, by the way. They did a great job. It's right at the edge of, it's 2 blocks from Tootsie's. It's perfect, whoever picked it.
But it's a nice community, and people can find a home at a decent price, and they're not going to have some local government killing them with taxes and regulation. I'll give you an example. My wife and I have been renting an apartment on Central Park South, slumming it, right? My dear friend, Dale Hemmerdinger, owns the building, and he's one of the grand old men of New York real estate. Like many of them came from Queens, built apartment buildings there, but he's not investing in New York now. He's everywhere else.
Yeah.
He's down south. He's in Charlotte. He's in Texas, because in New York, they treat business people as the enemy. The politics in New York are so poisonous that eventually you're going to have nothing but poor people living in the city, and they can't afford it.
Yeah.
I mean, when my friends in Washington talk about making affordable housing, my first reaction is, well, let's pay to get people out of these expensive cities and take them to a Nashville, take them down south to, Atlanta and some of these other cities where you can find decent housing at a reasonable cost. There's no way to make New York affordable given the current price structure. So you can spend as much money as you want, but it's not going to be affordable for people who are, living on $50,000, $60,000, $80,000 a year in income. It's not going to work.
That's scary. And this is coming off like the mother of all deflationary cycle lows. Don't forget that this is oil price.
We haven't had a deflation in this country in a long time. Even 2009, because of the action by the Fed, which I applauded, caught it. Okay. But what that means is there's no reset.
Yeah.
The reality is humans don't really generate a lot of net wealth, Keith. We consume most of what we produce. So in order to give people a chance to earn wealth, you have to allow prices to fall sometimes. Mm-hmm. But the folks at the Fed are terrified of that.
Yeah. Well, we're talking about that. That lasted like a month of time, so that wasn't very long. The market deflation I meant by that. All right, let's get some. There's some a lot of good questions here. First question is from Daniel. Chris, everyone can see inflation. It's everywhere. Is the Fed and Treasury deliberately lying to the American people, or are they simply oblivious fools?
No, I think most of the people on the Federal Reserve Board are actually very smart. I think they know that there are price pressures throughout the economy. Richard Clarida, the vice chairman, was saying this the other day. They're hoping that it settles down, but hope is not a good way to make policy, guys. Because once this behavioral change that we're seeing in terms of price behavior gets out of control, they will have to really slam on the brakes to stop that, as Volcker did in the late 70s. So there's no political appetite for that. So we're going to have inflation. That's it.
The one word in there, lying, or set of words, lying to the American people, because you answered the question with they're not idiots. I mean, they're not. I mean, I would recast that. I do get myself in some Twitter fights for this because I'm like, just because you're smart doesn't mean you're actually good at this job. I mean, in terms of like now casting things like what the economy could do or what asset classes to be in. But what about the lying part? Like, what about the sinister part of this, or a lot of people, ignorance is bliss. That might be even worse. I don't know. What do you think?
It's not so much lying. It's that the Fed is a monoculture. They are a left of center neo-Keynesian institution that does not welcome alternative points of view. And the reason for this is that their chief concern is confidence. Mm-hmm. So if you're trying to maintain confidence, are you going to tell people the unvarnished truth? Are you going to go up to Capitol Hill and chastise Congress for not having any fiscal discipline at all? It was interesting at the last press conference, Chairman Powell said that it's not his job to talk to Congress about fiscal policy. I'm sorry, you're wrong. It is your job, because you can't fulfill the mandate if Congress is out of control. Mm-hmm. And that's the bottom line. Fed chairmen need to have the courage to go up to the Hill, tell them the truth. And you know what? If they lose their job, bravo. That's what we need. We need more courage in this country. The Fed is the most cowardly, despicable institution I've ever worked for. And I say this as somebody who worked at the Fed of New York. I worked for Paul Volcker. I worked for Jerry Corrigan, both of whom I have enormous respect for. But you know what? In those days, a Fed chairman would go up to the Hill and both privately and publicly tell them what he thought. We don't have that now. No, We've got a bunch of pygmies.
We have an ex-partner from Carlisle who's a lawyer who's running the Fed. That's who that. Anyway, I'm not going to go off on that.
Yeah, but look, Chair Powell knows all about this stuff. He's not a stupid man. He's a very intelligent man. But politically, are they going to go pick a fight that's going to get the institution immolated? They're all worried about Fed independence, as though there is any, right? But the reality is that Congress doesn't want to hear it. Yeah, I could count on the fingers of one hand. Members of Congress, you could have an intelligent conversation about the economy or finance.
Mm-hmm. Well, on that point, this is a question you bring up, at least in my head, a very important question. Like, it's one thing to be a coward in the sense that you just defined it as an institution. But there's another thing to not be that coward and do what the MMT crowd really is not being cowardly about at all. They're being very brave. Like, I mean, I may not, I'm not going to put words in your mouth, I'm guessing. I may not agree with MMT, but I do respect somebody just putting it all on the line, saying we're going with this big time because we absolutely believe in that. And you, Keith McCullough, are an idiot because you don't understand it. There is some bravery in that. Now, I'm not saying that it's going to end well, but I respect Stephanie Kelton for taking a stand that is not, just playing possum like Powell is.
MMT, at the end of the day, Keith, is the legacy of war. The fact that the U.S. won
so you
World
don't agree
War
with it?
No, but it was obvious that it was going to materialize at some point. When you disconnect the dollar from gold, when you give the U.S. government basically the right and indeed the encouragement to go out and spend money and fund it with debt and not worry about repayment, well, you're setting an example, and MMT is just a logical consequence of that. I don't think it's particularly clever, spending money you don't have, debt forgiveness, that sort of thing. We've seen that with the Greeks and the Romans. So, and it's interesting, if you think about the British experience, we are the heirs to the British Empire, if you really understand human history. The Brits have always had a mortal terror of debt. After World War II, after the what do? They always try and pay off their domestic debt, because they know how weak they really are. They don't have the empire anymore. But in the US, we have this laissez-faire view of reality that says none of the rules apply to us because we're special. It's the exceptionalist view of economic history, right?
Yeah.
So, I think ultimately, until we crash and burn, and until American voters start to actually think about the people they send to Washington, we're not going to make any changes. Think about the people, Keith, who were in Washington in the 1930s, and many of them came to Washington to help the country because they could see that it needed help, compared to the cast of characters we have today.
Oh, I mean, it's
not even close. Go find me Carter Glass in the current Congress right now.
Well, I mean, fortunately, as opposed to a lot of the unfortunate truths we're talking about right here of this day and age, fortunately, that is America's history. The only other thing the British were really scared of are the Irish. Don't forget, huh? But there's a great book I just finished reading called The Immortal Irishman. The story I'm sure you've read of Thomas Marr, who's one of the generals in the Union Army, and he came from Ireland, and that was fighting for a purpose. Like, it was fighting for the flag that wasn't even his own, but fighting for the principles of America against slavery, et cetera. And it was like, every time I start reading a book that's got 50 to 100, no, not 50, 100 or years more behind it, you're like, why can't we go? Like, you can never go back. It's never going to be that way.
Well, no, and it shouldn't be. Human history is about change and innovation. That's the way it is. That's the reality. But my namesake, Richard James Whalen, fought for the Union in the Civil War.
Oh, really?
And he came to this country to get away from British tyranny. Yeah. If you were Irish and Catholic, you couldn't own property in your own country. You were turned into a serf by the British. And I am among those who will never forget that. So, I think you got to always remember that things do change, mores change, social patterns change. But we always have to remember that the reason we're able to behave like drunken libertines today is because of the sacrifice of our parents and our grandparents.
100%.
And,
I agree with that 100%. We should be thankful for that every day. This question, I have no idea what the answer is. It's from Avery. How does this dance end?
It just keeps on going, but your purchasing power goes down every day. The only shelter is in stocks and real estate. Everything else is a fraud, and I include most coins, by the way. Yeah. I'm sorry. Okay. Beanie Babies or tokens. Somebody asked me about Ripple this morning. No, Ripple's a security. Thank you. It's a fraud. I've been a member of FINRA for 30 plus years, so. Yeah,
well, on that, the number one ranked question I was going to ask it eventually from Stefano is like what your favorite asset classes are. Like when you start to think about applying these insights and your thesis. Yeah, is that just it? Hard assets? I mean, you mentioned real estate, obviously.
Well, look, the financial markets until now have given you a bit of a hedge. Anybody who had the wherewithal to buy stocks in the last 25 years has kept ahead of inflation.
Yeah.
Likewise with real estate. Real estate has, generally speaking, done extremely well. Look at home prices. So there are places you can hide, but the politicians are coming for you. You know, Uncle Joe Biden, who looks more and more like Joseph Stalin every day, is coming for you. And remember, his whole agenda is just Obama, warmed over and with a little bit of cream on top. And they are going to come after everybody. They're going to attack the family farm. They're going to attack small businesses. And I wish the Republicans could get their act together, because they could end up, completely sweeping the House and the Senate in the midterm elections if they could just get a strategy.
Well, now that everyone who is long Dogecoin to dodgeball to being long Biden is turned off this, we will roll ahead.
Well, God bless. Look, I would rather have you speculate on Bitcoin than playing around with, blockchain, for example. I think we're done with that, thank God. But as long as you understand that this is speculation, it's okay.
Yeah.
I mean, I'll give you an example. I bought Square when it was in single digits, okay? And why did I do this? I thought it was a neat company, but it kind of looked like Visa and MasterCard. And I knew that the managers were going to find this because it was fintech. Had nothing to do with the valuation of the company. It had everything to do with the desire of equity managers, right? So they took the thing up to $180. And I got out at 100. I felt bad, right? 10 times your money. But that just gives you an illustration. No, I realized I should have gotten back in. But the point is that all of these things are driven by scarcity, by demand on the part of managers who have to earn their fees. You don't even hear about investors in my description here, do you? It's all of these agents who are supposed to be representing us.
And what a large community of people that are along this stuff, including me. I don't know if I would put myself in the community of people that don't understand this component of it. They don't understand that a lot of these things are just inversely correlated to a dollar going down. The price is going up in dollars. I mean, it's the correlation on Bitcoin and the CRB commodities index is identical. I mean, that's what you got. You got a lot more vol and a lot more beta in that Bitcoin position, or I do.
Oh, totally.
But I understand it.
Like my good friend Ralph Del Guidice, who I cite a lot on Twitter, and I talk about this all the time. The offshore bid for dollars, the offshore bid for treasury collateral is crucially important to understanding it. The reason the Fed can get away with all the stupidity they put in place is because of the offshore demand. And yet you never hear them talk about it. Yeah. If you see a Fed chairman on Capitol Hill, do they ever talk about the offshore demand for U.S. currency? No.
I mean, this also, and this is another camp that we haven't talked much about, because clearly this discussion has been in agreement when it comes to dollar devaluation, government intervention, big government hand, how it creates inflation in dollars. But you have this other community that's got a milkshake or something all over themselves in this last 3 or 4 weeks. That are hell-bent for leather that dollar scarcity is going to create the mother of all rallies in dollars from here. I do respect, the work of Jeff Snyder. Let's start with that. And here's a good question. There's actually, there is a question here from Sven, Norwegian. Sven says he's a Norwegian in D.C.
Okay.
Thoughts on the Eurodollar system and the work Jeff Snyder has done. Do you agree with him on that? Are you familiar with his work, Chris?
No, is he bullish or bearish on the Eurodollar system?
Well, bullish on dollars.
Bullish on dollar. Yeah, I would agree with that. I mean, the European experiment is just that. They never had a real catalyst for getting it done, and I'm very concerned that the Germans and their court system may eventually, force Germany out of the system. Imagine if they left. What would you have left? I think ultimately the Germans, the Benelux countries, Holland, the rest of them, they could perhaps survive as an economic bloc, but the Southern European countries just can't do it,
Yeah, one big thing that's been going on is actually just the gravitation of European interest rates back to positive in many cases, and some in Germany's case towards zero. But I think people have underestimated the impact of that in its translation to a stronger euro against the dollar too. That's been a big headwind for the dollar, is that they're actually letting the Germans out of their homes, and they have shitloads of savings, these European economies, for the first time in forever, and those are going to get spent. So you have it's an interesting window where the dollar could like blow up, and I mean quite literally in the next 6 weeks, maybe in the next couple quarters, as we just keep dumping all this fiscal spending on the table. That's just my view, but we'll see.
No, I don't think so. You got to remember, the thing that saves the dollar, even though its purchasing power falls continuously, is the use as a means of exchange. It's not as a store of value.
Yeah.
The only reason the dollar is important to the world is because it's big. How would you pay for oil if you didn't pay in dollars? You're going to use rubles? You can't. So, the Europeans, their problem basically is that they don't have much of a financial market. They can't absorb a lot of inflows, and frankly, they don't want them. They really are not interested in big flows from other countries. So you have a system that's largely government financed, banks. The banks are very weak in Europe, but there's no independent bond market. There's no private securities trading per se in Europe. It's all government. And that's why they get no growth.
Yeah. Again, the pace of the dollar's decline is a pretty interesting one. And I agree. I mean, it's just an empirical fact what you said. I mean, high 80% range of all commodity contracts settle in dollars. It's just, it's what it is. Last question, this is, because we're running out of time. Do you have any thoughts, and this question's popped up in a couple different ways, how a job guarantee, these MMT items, like how a job guarantee or UBI, universal basic income, will impact inflation? Do you have any thoughts on that?
Oh, it'll make it higher. Remember, Humphrey Hawkins back in the 70s was a compromise. There were people that wanted to guarantee a job for every American coming out of World War II. Right. And instead, they said to the Fed, well, you got to guarantee, quote unquote, full employment, right? So now we come full circle, and we're going to have that same conversation again. But since the Fed is constantly taking away purchasing power from Americans, regardless of how wealthy you are, ultimately, we all become wards of the state. Okay? That's how this ends. And it will take a long time to get there, and it will probably result in political instability in this country as well. But the reality is that you can't have free lunch. Lunch does cost something, and it means that piece of paper in your pocket a year from now will buy less than it does today.
Yeah,
that's it.
Yeah, and hopefully we remember that slide 48 that I showed. There is a long history actually of that. The bill is the inverse, which is we're showing the inverse of the deficit, by the way, on that. And I think what Chris just ended with is what we call the fourth turning. The fourth turning. These things are not fun when you get to that final part of the movie. But again, thank you for having talk about bravery and cowardice and all that stuff in between. I mean, just for being out there every single day. I mean, you're out there just sharing your wisdom and engaging people. You're not afraid to debate anybody on any topic, and you certainly have your own convictions, which is great. So thank you for doing that for us today.
No, I appreciate it, Keith. I had two great examples: my father, Richard Whalen, and Paul Volcker. Tall Paul didn't have to spend his entire life in public service. He could have gone off and made money. And instead, he was a great public servant. We should take that example.
100%. I agree with Chris. Somebody tweeted at me today, why do you do this if you're so good at this? I said, to help people help themselves. All right. That's a real conversation. Thanks for joining us.